Welcome to our channel, your go-to source for the latest updates on tax, GST, and corporate laws. Buckle up as we dive into this week's most intriguing developments, breaking down complex legal rulings into bite-sized insights. Whether you're a business owner, a tax professional, or just curious about the law, we've got you covered with the most important updates. Let's get started. First up, let's talk about some fascinating developments under the Income Tax Act. In a recent case, Arun versus Deputy Commissioner of Income Tax, Chandigarh Tribunal, the court ruled in favor of the assessee. Here's the deal. Arun received a lump sum payment in lieu of his pensionary claim under his employer's scheme. The assessing officer tried to deny the exemption under Section 1010A, arguing it was a payment for the end of employment, but the tribunal disagreed. They clarified that since Arun's services had ended and Section 1010A doesn't restrict benefits to only superannuation or retirement, this payment squarely falls under Section 1010A. 1. A win for clarity in pension exemptions. Next, in Narayanbai Shivabai Patel versus Income Tax Officer, Ahmedabad Tribunal, the focus was on Section 56(2)(x). The tribunal held that any addition made based on the difference between stamp duty value and purchase price, or between the value determined by the valuation officer and the purchase consideration, cannot be treated as underreporting of income to invoke Section 270A penalties. This is a big relief for taxpayers facing overzealous additions. Now, let's move to Eastern Shipping Private Limited versus Income Tax Officer, Mumbai Tribunal. This case is a game changer for agents of foreign companies. The assessee, acting as an agent for a foreign shipping company, raised invoices on importers, exporters, and freight forwarders. A portion of the amount was retained and the rest was transferred to the principal. The catch? The importers and exporters deducted TDS on the entire invoice amount. The tribunal ruled that since the assessee couldn't disclose to clients that part of the funds went to the foreign principal due to business expediency, they should still get credit for the full TDS amount shown in Form 26AS, a practical decision for businesses in similar setups. In another Mumbai Tribunal ruling, Prudent Insurance Brokers Private Limited versus Principal Commissioner of Income Tax, the focus was on CSR and donations. The tribunal held that even though the assessee disallowed its CSR expenditure under Section 37(1), any donation to an institution registered under Section 80G stands independently. This means the assessee can still claim a deduction under Section 80G. Great news for companies balancing compliance and philanthropy. Finally, under the Income Tax Act, the Gujarat High Court in Punjab National Bank versus Income Tax Officer tackled a sloppy assessment. The assessing officer passed an order in the name of the non-existent Oriental Bank of Commerce, despite prior notice of its merger and a request for PAN cancellation. The court noted that a little verification could have avoided this mess. While a hefty Rs 1 crore penalty was initially proposed, the court settled on a token cost of 100,000 rupees payable to the Gujarat State Legal Services Authority, since administrative action had already been taken against the officer. A reminder to double-check before relying blindly on software. Now, let's shift gears to GST laws, where the Delhi High Court has been busy delivering impactful rulings. In one case, a petitioner engaged in trading claimed a refund of excess balance in their electronic cash ledger. Initially, this amount was adjusted against a liability that was later canceled. The court ruled that the petitioner is entitled to a refund with statutory interest, a fair outcome for businesses managing cash flow under GST. In another GST case, the Delhi High Court addressed the cancellation of GST registration. The assessor's request for cancellation was initially rejected, and after a show cause notice, SCN, their registration was canceled retrospectively. The court found this problematic since the SCN didn't propose retrospective cancellation. The ruling? Cancellation should only apply from the date of the SCN. This decision emphasizes procedural fairness in GST administration. In a third GST case, the Delhi High Court showed leniency. The assessee missed responding to a show cause notice and didn't attend a personal hearing, later challenging the notice via a writ petition. The court, considering the possibility of inadvertence, allowed the assessee to pursue an appeal a second chance for taxpayers to get it right. Let's wrap up with some key updates under other corporate laws. In Directorate of Enforcement versus Rajesh Kumar Agarwal, the Delhi High Court struck down an order by the adjudicating authority. The authority had confirmed the retention of the respondent's property without providing any reasoning, a clear violation of the statutory mandate under Sections 8.2 and 8.3. The court called the decision mechanical and superficial, setting it aside for lacking proper inquiry, a strong reminder of the importance of reasoned orders. Over at NCLT Chennai, a case involving a corporate debtor defaulting on a financial debt was resolved. The respondent, the guarantor for the entire loan, faced a claim. Letters from the debtor dated December 7, 2016, February 23, 2017, and March 15, 2017 acknowledged the liability, extending the limitation period to March 15, 2020. Thanks to the Supreme Court's ruling in Cognizance for Extension of Limitation 2022, the limitation was further extended, keeping the claim alive. A critical update for creditors and guarantors. Lastly, SEBI issued an interpretive letter under the Informal Guidance Scheme 2003 in response to Equity Master Research Private Limited. SEBI clarified that the $1,051,000 per annum per family fee cap introduced on January 8, 2025 applies to all individual and HUF clients, including existing ones. Research analysts must comply with fee-related provisions, including refunding advance fees beyond 1 year by June 30, 2025, a clear directive for transparency in fee structures. That's a wrap for this week's Legal Roundup. From tax exemptions to GST refunds and corporate law clarity, we've covered the rulings that matter. Don't forget to like, subscribe, and hit that notification bell to stay updated on the latest legal developments. Drop your thoughts in the comments. What do you think of this week's rulings? Until next time, stay informed and keep navigating the world of law with us.